So we're going to introduce something called double entry accounting system. Basically, it means that for every transaction, I have to record at least two accounts. The debits have to equal the credits. So this goes back to the rules of debit and credit. Take a look at the attachment that's attached in Canvas. It's called Rules of Debit and Credit. And basically, we'll be looking at, I'll give you a second to get it. I'll put it on pause while you pull it up. Rules of Debit and Credit. Okay, hopefully you're able to pull up Rules of Debit and Credit. The first sheet talks about the T accounts. If you turn to page 2 on that, we're going to be at the bottom of page 2. We're going to be talking about that. So at the bottom of page 2, you're going to see something like this. So these are the rules for debit and credit, because debit and credit, even though the locations are always the same, debit on the left, credit on the right, what they mean will change based upon what type of account. So for all assets, a debit will increase, a credit will decrease. And if you look at the rules of debit and credit, bottom of page 2, you will see that there. And the normal balance is always going to be on the increase side. And we'll talk about that a little bit later. For any liability account, it's the opposite. A credit increases and a debit decreases. And the normal balance is always the always the increase side. Stockholders' equity, same as the liabilities. Okay, so all you really need to know is what type of account it is. Then you look at the rules of debit and credit to see what do you do, debit or credit, based upon increase or decrease. Okay, and then we have our revenue accounts. So for revenue, to increase a revenue, it's always going to be a credit. Matter of fact, for chapters 1 through 4, you will never debit a revenue. So put a big X through your sheet. Now we're on the top of page 3 on rules of debit and credit. Put a big X through here. So you're never going to debit a revenue account, only credit. You're only going to increase that. For the expenses, the debit is the increase side. Credit is a decrease. We'll put a big X through here because you're never going to credit an expense until I tell you otherwise. Now the last one we have on there is going to be dividends. So dividends, the increase is a debit. These are like expenses. The increase is a debit, the decrease is a credit. But until I tell you otherwise, you're never going to credit a dividend. So put a big X right there. Okay? So you just have to remember some rules of debit and credit. We talked about the normal balance of each account. It's either going to be a debit or credit, but it's always the increase side. So let me show you a little chart here. So if you notice, here's my things, here's my assets. The normal balance is going to always be a debit. So that means if you are in a balance and you're in an asset and it's got a credit balance, you probably made a mistake because your normal balance should be debit. For all liabilities, normal balance should be credit. For all common stock, normal balance is credit. Retained earnings, normal balance is credit. These make up my equity. Down here I have my revenue, which is normal credit balance because I told you to put a big X through here. Never debit a revenue till I tell you otherwise. Expenses normally have a debit balance, and you're going to put a big X because I don't want you crediting any expense account. And dividends are the same as expenses. Put a big X here. So these are the rules of debit and credit. That 4-page handout gives you lots of information on it. Make sure you actually print it. It's called Rules of Debit and Credit. And keep it handy as you do your work.